Hey traders, Raghee here. Welcome to Charts and Coffee. Happy Tuesday, everybody. Hope everyone's doing well. Taking a quick look at the NAS this morning. I was just on Benzinga, and towards the tail end of that discussion over there, we got some news about made for China restricted sales of Nvidia chips and weighting rules all, gang. Sector weighting, stock weighting, and just general movement within stocks that are so connected to each other in terms of, well, take a look at SMH, the impact in the NAS, the weighting of Nvidia, and immediately you can see a little bit of movement lower. Now, what's interesting is the NAS had been trickling lower since about 5 a.m., crossing over the 200 at the end of the Asian session. So the Asian session winds down about 4 a.m. Eastern. 30 minutes later, we're crossing down through the 200, which is a fairly significant shift compared to sort of this defying gravity that the NAS saw since yesterday, since Monday's close, through the Asian Open, through the European Open, through the UK Open. So this movement, this acceleration to the downside is just really a continuation of a shift that we saw on the NAS. That being said, you take a look at, here's Nvidia this morning. That's the big move that's going to be pushing Nvidia down through about 443, perhaps. I mean, we still got 28 minutes before the open, but that's what we're dealing with at the moment. I mean, clearly that's going to drag down the SMH. So then, it's two things. One, I'm not going to shorten the whole, right? I'm not going to be looking at shorting Nvidia at the open or shorting the SMH or shorting the NAS at the open. No. However, there's two ways we can go about doing this. If we are indeed inheriting a downtrend in tech, that's going to play out in the NASDAQ. That's going to play out in QQQ. That could drag down XLK. There's a number of places this could play out. I'll wait about 5 to 10 minutes before I actually put on a trade, and I'm going to need a bounce. So if I'm going to be looking for some sort of short trade, hourly price movement range, maybe Darvis resistance, 200 per pulse. There's a lot of things we can look at to get short, but I'm not going to get short at the open. So there's one way I can look at it, which is just go where the news is, and that's one approach. The other approach is it's a great big marketplace, right? So what's actually happening with financials? Are there corners of the broader averages? Are there corners of the indices that really don't care, right? Can I look at regional banks? Can I look at big banks? Can I look at healthcare and see if this is really an environment where it's sell all the things, or it's simply tech's going to have a rough time because of Nvidia, because of this news, and that might give the Russell, that might give the Dow a little bit of a reprieve. Now, notice I did not say the S&P, because the S&P on any given day could move a bit like the Dow, depending on what healthcare and financials are doing, or it could move a little bit more like tech, depending on what XLK and XLC are doing. So that's where, we have to choose where we want to put our trades in this morning. And I'm not entirely certain I want to deal with the volatility of the news around Nvidia. However, it doesn't mean that we may not see just kind of an overall washout, but I think that takes about 5 to 10 minutes in the morning to get that directional bias. So that's the first thing I want to mention here on the morning, what I'm looking at. And, you've got to wonder at what point, and this is where I'm going to step back and look at Nvidia through a different lens, not the 5-minute, not even the 1 hour, and maybe not even the daily, but, when I was sitting and talking with the guys on Benzinga, the topic that I think is probably the most important that gets not discussed, although we all think we know what it is, we don't necessarily. What is someone else's time horizon, right? Now, time frame will map to time horizon. Okay, Rog, what on earth does that mean? If I'm looking at a 5-minute time frame, I'm not looking to hold that trade for days or weeks, right? It's maybe today, maybe tomorrow. 5-minute time frame, 5-minute slices of psychology. However, there are folks that are going to look at Nvidia through that short-term lens, and there are other traders or investors that are going to look at Nvidia through a longer-term lens and say, all right, this is Kmart, middle of the store, blue light spinning. all of a sudden, someone who's looking at maybe a 410 to get into Nvidia, places that we bounced at consistently from June, July, September on, all of a sudden they say, come on, bring it. My time horizon's far longer on a weekly. I'm looking to hold for weeks, if not months, and 420 whatever presents a great opportunity if my time horizon is longer, right? So before we ever engage in an idea, before we ever engage the market, what is the time horizon? Time frame should map to time horizon, which is why I always say if I'm day trading, if I'm trading with a time horizon of 1 to 2 days, I don't give a rip what the weekly or monthly have to say. I barely care what the daily has to say, right? So I think a lot of times we start to creep into multiple time frame confirmation, we lose the reality of the time frame dictating a completely different time horizon. If anyone's kind of hearing what I'm saying in that regard, you're going to start to ask yourself, well, what am I using to make my decisions? What's my primary decision-making time frame? And so again, if my primary decision-making time frame is looking at Nvidia, I want a little bit more weakness, right? I want to get down to maybe 420. I want more weakness. If my time frame and time horizon, days to weeks, all of a sudden Nvidia down trading between 446 and say 437, which we're inside, that's a great daily price movement range, daily time frame setup. It's going to work pretty well potentially on the 1 hour too, but that daily looks pretty darn good where we've driven down to, right? And if I'm oversold there and if I'm looking at a daily price movement range support, fantastic. I can put on a short-term swing. If I'm 5-minute time frame trading, I'm a day trader. I'm a today trader, and I'm probably looking for shorts. So think about that, especially with something like Nvidia. What a great example to kick off the morning in terms of, where we want to be. All right, next up is, well, as always, gang, let's take a look at our questions. Phone lines, as always, are open for your requests. So let's take a look at what we've got going on. Hey there, good morning, D. Bolton. Yep, Nvidia is probably going to have it already is. It already is. And Wilkin, yeah, kind of following up D. Bolton's comments, is it an overreaction? I don't know, right? Is it possibly? It could be. So what I need now is a setup, right? What's the difference between a move and a setup? Where has price carried down or up to? And in that zone, are my indicators, are my strategies saying, hey, this is a point at which I can control risk and enter long, enter short, whatever it may be. So it might be. So now I need that setup. And then we can, go from there and see if there's a way to manage risk and take advantage of the opportunity. All right. Alex says HPMRs and the indices intraday are kissing each other quite often lately. So they have been overlapping. Alex, that is one of the awesome built-in features of the hourly price movement range, which is when volatility exceeds the quote unquote norm. When we are outside the 68% probability of price movement, they are immediately going to stack, overlap, kiss, as you said. Yes, and that's a warning. That's a warning, right? So in this environment, is it just that volatile? I would say a lot of the news, you look at something like Nvidia. No one woke up thinking today's a day we're going to hear about China and Nvidia. So yeah, I think a lot of it's just the volatility. But again, depending on what this volatility means to you, to me, as a day trader, it's weakness. As a swing trader, it's a potential buy. So depending on your time frame and time horizon, this is volatile to some traders. It's not really volatile to others. Really depends on the slice of psychology we're looking at, right? But a great point on the day-to-day volatility, which has been, I agree, quite high, which has been making day trading pretty darn great. And it's been making swing trading, while it's starting to look better, like this Nvidia might be a swing trade, starting to look better, it's still a little challenging. Agreed. All right. Andrew asks, do the more seasoned traders in my Sector Secrets Mastery room have more advantage over my novice traders? Andrew, I would say that'd be true in anything, right? Does an experienced trader have an advantage over a new trader? Does an experienced tennis player have an advantage over a novice tennis player? I mean, of course, right? I'm not going to say that's not true. But where, right? Let's get specific to what the challenges are to a new trader versus experienced trader. And Andrew, I can say this with 100% clarity and experience. The challenge for new traders is not necessarily what's happening on the charts. I have found that it takes about a week for a new trader to say, Rog, you've automated everything. The zones are automated. I'm not having to draw anything. If a trader can see lines and colors, they can use the chart setups that I share. Here's where the experience level, which chapter of the book you're on, makes a difference. Order entry. That's where I find most traders will have the biggest struggles. I find that a trader after a class, 4-hour class, after about a handful of days in the mastery, they're seeing the setups. But the hurdle is taking what they see on the screen and saying, okay, now I'm going to place an order to get long, to get short, to scale, to tighten the stop. That's probably the steeper learning curve. And that's not necessarily the trading aspect of the mastery. It's the order entry muscle. It's the order entry knowledge, getting very familiar with the platform that you're using so you can communicate what you're seeing to the market. And I think order entry, that tech, is probably the biggest challenge for any trader. So that's specifically the chasm, right? Do alerts allow everyone to get in? Andrew, it's not just alerts. We do something a little bit different in the room. It's not just alerts. So what's an alert? Imagine, Andrew, we're using a GPS, and it could be any of the popular ones on the phone, and it said, turn left now. We delete the app from our phone. In fact, I have. One time, one app said, turn left now, and I deleted the app. I need to know at least a couple hundred feet ahead of time, a quarter mile, right? So I take that GPS attitude into the mastery. We actually work setups, right? So if I have a fill, great, but that's history. Sometimes in a fast moving market, that's ancient history. What we do is we work triggers. So the alerts are actually really alerts. In other words, this is where I want to buy this option. And so we put that out ahead of time. Everyone sees the trigger ahead of time, and then everyone can react if they want to. I mean, you know where I'm going to react, and then everyone can react if they want to, if it's a risk manageable position. So my level of transparency is different than here's where I got filled. My level of transparency is here's where I want to get filled. And until that price is reached, until that criteria is reached, I'm not doing anything. So in that regard, yes, we absolutely level the playing field in the Sector Secrets Mastery with that very specific approach. But I will still say the biggest challenge I see is that that acuity, that comfort on the platform. But that's something anyone can learn relatively quickly. It's just a matter of that being probably the steepest learning curve. Yeah. So thank you for the question. Hey there, Ren. I recently learned of you this past Friday. Watched your videos. Oh, cool. Thank you, Ren. I appreciate that. I'm curious. Where did you find me? Where did you find us? I'm already learning so much and hope to sign up for day trading option strategy class in the beginning of November. Very cool, Ren. Very cool. And I look forward to seeing you in the mastery. I think you're going to love the class, and it's going to open up a type of trading that I think is very, very reasonable for traders of different experience levels and different account sizes. So thank you so much. All right, next up, Andy asked, could I explain again why I use a 25% paper cut on trades? That's what I found works, Andy. It's really experience and testing and a desire to not use max debit, right? Now, could 25 be 30%? Sure. Could it be 33%? Could it be 50%? The fact of the matter is, I don't think anyone knows what the magical level of acceptable risk is. We have to pick a point. So the way that I chose it, by the way, I'll tell you 10 years ago, it was closer to 50. And then I found and a lot of this is experience, Andy, putting on trades, putting money, putting skin in the game, winning, losing, and then going back and studying what went well, what didn't, right? It's not just a matter of what's my account balance, what's my net lick, as it said, net liquidating value. Who cares what the account balance is? Because oftentimes that will not tell the true story about what actually built the account. That being said, by going back, by dissecting my trades, I found that 25% is the best balance. And so that's what I use. Could 30 be fine? Sure. Could 33? Sure. Could 15? Too tight. too tight, right? So there is sort of that, what's the story about the Goldilocks, right? The porridge was too hot, the porridge was too cold, the porridge was just right. That's really what we're always testing and optimizing for. And over the decades, that's what I found works for me. So thank you for the question. All right, can we please take a look at UNG. Sure. Natty is finally, Ren, Natty is finally looking like an uptrend. I still like FCG, Natty gas stocks better. Yeah, I still like them better for sure. Ultimately, I think crude oil is probably going to outperform USO, XLE, OIH, XOP. But if you're looking for something that's going to put you in a little bit of natty gas exposure, but not still be in a very volatile commodity like natty gas, I would say. By the way, its nickname is the Widowmaker. Just something to think about. I like FCG, natty gas stocks. I also like XOP, which allows us to take advantage of the oil explorers with crude, but also Natty's got a foot in there as well. So XOP might be a great way to look at that. All right, next up is, so Jim from our Essentials room. Taking the setup is my challenge, says Jim. Jim, I'll tell you what, and in fairness, I think this is referring back to Nvidia. So Jim, I'll tell you this. Taking the setup, when I wrote my first book, in my first book, I started introducing a lot of concepts that were sort of psychological, but the way in which psychology and technical analysis are interwoven. And two of the bigger concepts that I introduced in my first book, I think was back in 2007, was a concept of hot zones, scheduled, high impact, high volatility events, and how we want to take advantage of those either leading up into the event or after the event, but recognizing what they can do. Scheduled events. And the other one that I think was really important and pertains to your question is the 3 C's, right? So anytime we meet a confident trader, we'll say, well, it's just time. It's not time. I've met a lot of traders and investors who've been at the game for a long time, but are not confident. So what's the difference? The difference I found is a cycle I went through often, and I had to go with alliteration. The reason I call it the 3 C's is if the output, the ultimate goal is confidence, what are the precursors? Comprehension. So Jim, if there's a setup that you want to take, ask yourself, am I following somebody or do I really understand it? Do I have full comprehension of what the trade is, what the risk is, what my position size should be, where the stop loss should be, where the target is? So don't blame yourself. It just could be an incomplete amount of information. You don't have the understanding that you need to have the confidence. Okay, so that's the first C, comprehension. Do I understand all the moving parts and pieces to the trade? The second C, right, this is the hard part. So confirmation. Okay, if I understand something, now I need to know that it works. So let's take money out of it and let's talk diet. What is the diet that we stick with? Well, the diet we stick with is the one that we can actually follow. And the one that we follow that shows results, oh, okay, I stopped drinking soda and I lost, like my husband did, 25 pounds. Oh, I see confirmation. Oh, I don't know if he lost 25, but he lost a lot of weight. Just stop drinking sugary drinks, right? He stopped doing something and saw that it worked, and it gave him confidence to keep sticking with it. And that's where I think, take money out of it and ask yourself, how do you have confidence in anything you do? Got to understand it, and you got to see it working. And then you just loop and loop and loop until you just have this thing called confidence. And it takes, you ready for it? Work, right? Everyone wants to take the work out of work. No, gang, this is work. But it's not toil, right? It's just doing the work, comprehension, confirmation, and then let it go, right? And just let it do its thing. So anyways, thanks for the question, Jim. That's I think something everyone can benefit from. And those are 2 big concepts that I introduced in my first book. And those were concepts that helped me turn the corner. All right, gang, I'll see you in the next Charts and Coffee, same time, same station. Be good to each other. My futures folks, my sector secrets mastery folks, I'll see you in just a moment.